Raoul Pal, a former Goldman Sachs exec, now founder of Real Vision and Real Vision Crypto, has never been more bullish on Ethereum. He recently moved the vast majority of his crypto allocation to Ethereum, as he believes ETH is the best risk-reward opportunity of the year. Now, one of Raoul's strong points is technical analysis, and he recently shared some very interesting charts which show how Ethereum is on the verge of a breakout. So in this video, we'll be looking at how Ethereum could be getting to and blasting past $20,000 by March next year, this Bitcoin Futures ETF, and why this may not be as good as it first appears. And then we'll finish up with Solana. Solana's exploded over 7,000%, and he shares some very interesting insights on its network adoption. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, great news for all the Ethereum fans out there. Raoul Pal is one of Ethereum's biggest bulls, and he also believes we're on the precipice of a big move up, and we're about to find out why. Ready? Let's do this.
Ethereum's been in this sideways consolidation since May. It's just about to break out of a wedge pattern. These kind of patterns, when they break, tend to be explosive in move. And guess what? Ethereum is exactly following Bitcoin over an extended period of time. We're talking 6 years here of Bitcoin's previous run. So again, it just suggests that Ethereum can get up to 20,000. Again, I actually think it exceeds this, but it just shows you what the back end of the year or going out into March can look like. If you want to see it in regular price terms, it kind of looks like this. That's not on the log chart, which is, again, mind-blowing in terms of performance. And then obviously the bear market steps in after that. We've gone through the period of consolidation, and the period of consolidation is when the market gathers the power. And we know we've got restricted supply of ETH, all the Bitcoin coming off exchanges. We've got the ETF, we've got ETH 2.0, we've got lots of adoption going on. I couldn't think of a sweeter spot for this. I mean, this is as good an opportunity as we saw in March, April, May, when I started pounding the table and getting irresponsibly long.
So clearly getting very excited about the next 3 to 6 months, which brings us up to about March next year. Also, Plan B, the creator of the stock-to-flow model, suggests the 4-year cycle ends about March next year as well. And so crypto investors will need to decide what to do, as there could be another crypto winter, which could last 1 to 2 years. Some options include just hodling throughout and dollar cost averaging every single week or month. Riding the ups and downs historically has been a great strategy. You could sell in 10 to 20% increments, and this is what I will be doing at certain price points. Or will you bet on this super cycle theory, which says because of mass adoption and institutional investors, we will no longer see crypto winters? You will have to decide. Okay, next up, this week is a very important week in crypto. We just had the news that Europe has launched its first Bitcoin ETF, but it's the US that has to decide on a Bitcoin Futures ETF this week. And this may not be as good as it sounds. Why? Check this out.
But let's talk a little bit about the construction of this thing. This is a futures contract. So why does that matter? Well, the SEC like it because futures are regulated and it's on the CME and it's cleared, so you don't have the custody problem. But one of the movements behind crypto was this self-custody, the ability to take control and get rid of middlemen. What the SEC has actually done is create a product that will deviate from the price of Bitcoin because of the futures contract. So it will trade at a premium in bull markets and a discount in bear markets, just like the GBTC product does. That opens massive opportunities for hedge funds to arbitrage it. So they would buy the Bitcoin and sell the futures contract, and it settles at the correct price. So they make a fortune out of this. Not only that, but the construct of these ETFs also bring in, you or I could just go to the exchange and buy Bitcoin, right? We're paying the exchange a little bit of money. That's it. Done. We self-custodied it. Nobody else involved. This vehicle means that the arbitrageurs take their slice. The ETF provider takes their slice. The lawyer who set up the fund takes their slice. The administrator, the auditor. All that happens is you don't get the performance. And everyone says, well, Bitcoin's up 300%, and how come it only made 100%? Yeah, because you've been screwed. If the SEC really cared about looking after investors, they wouldn't allow these futures contract versions. I understand for commodities it's useful, particularly with agricultural commodities, because you can't store them. So a futures contract works, and it's suboptimal is what it is. But there's no excuse for something physical like this.
Doesn't sound great, right? And I would add that the chairman of the SEC, Gary Gensler, has reiterated that one of the core objectives of the SEC is to protect investors. However, a Bitcoin Futures ETF isn't primarily used by retail investors. It's a financial instrument mainly for institutional investors. So who exactly is benefiting here? A regular ETF, which actually holds Bitcoin, is good for Bitcoin and the retail investor, but the SEC is not approving one of those, even though this would open up the market and let people invest in Bitcoin in a safe and regulated environment. So who exactly is the SEC protecting? Canada launched the first true Bitcoin ETF. Brazil now has one. Europe now has one. So I say, come on, US, you're meant to be the leading economy, right? Anywho, moving on. To finish up, Raoul also did some excellent analysis on Solana's network adoption. Check it out.
So here's another example of one of the tokens that is earlier stage, seeing adoption. This is Solana. I've talked about this a reasonable amount. Solana is seeing adoption. It's very clear. And what's amazing, it's exactly following the Ethereum price from its last bull run. And guess what? The prices are almost identical too. So the left scale and the right scale are almost the same. They're both at roughly $1,000. Sorry, not $1,000. They're both roughly at whatever the price is now, $400. And it looks like there's a hell of a lot of upside. So
former Goldman Sachs, now founder of Real Vision, Raoul Pal is one of Ethereum's biggest bulls right now, and he's recently moved most of his allocation into Ethereum. His technical analysis shows that Ethereum is about to break out of a wedge pattern in an explosive move which could take Ethereum past $20,000 by March next year. He also pointed out that a Bitcoin Futures ETF is most beneficial to institutional investors, as they get to benefit from an arbitrage opportunity, and it's not so great for the retail investor. And he also showed Solana's network adoption is closely tracking Ethereum, which means it could outperform Ethereum in the coming months due to its smaller market cap. So there you are, guys. Hope you enjoyed. Again, this is just even more data showing that the next 3 to 6 months in crypto could be epic. Let me know what you think below. For now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.